Our responsibility begins and ends with our partners and our shareholders, and that's it.
That's right. Ever since they deregulated the market in the 70s, these brokerage houses, your planners, your money advisors, they have no fiduciary relationship with you at all. It's all about them. That's right. Hi, I'm Phil Grandy at philsgang.com. Welcome to my video. I'm going to show you the next 5-6 minutes how easy it is to make money in the stock market just using charts. Because charts identify for you when the big institutions are buying the stock, when big institutions are selling the stock. What you do is piggyback off of them. Doesn't that make sense? We don't need fundamentals anymore. We used to. Before deregulation, we had fundamentals. We had to know everything about these stocks. We had to know about their market cap, their trailing PE ratio, their price to book, profit margins, operating margins, all that. And what did you have to do? You had to go hire these crooks. These are called brokers. You needed them. But before the deregulation, they were pretty good guys. And they really worked hard for you. Because what did they do? They used to go out and identify companies that had bad management, but what was a good company. And then when the company stock dropped from 50 down to 25, they go and identify those companies. And then they go in and they get rid of the management, bring in new management. And over 5-6 years, that stock would be up. And then you would sell it 5, 6, 7 years later, and you make money. These guys used to work really hard for you, Wall Street, because they were making $150 every time they sold you a stock. Then came in the discount brokerage. Once the discount brokerage came in, they went from $150 to $5. They had no loyalty to you anymore. And to live the lifestyle they became accustomed to, they had to go buy the stock first. They bought it first, and then they sold it to you. You'd have to ask every time they tell you to buy a stock, well, why are you selling it to me if it's such a good stock? You own it, don't you? Ask your broker the next time. Because it's true. They buy the stock first and they sell it to you. You remember the IPO. You remember the hot stock market when they used to come out with a stock at $5 and Maria Bartiromo said it's on fire, and by noon that $5 stock be up $105. Well, see, that they could do because there was no fiduciary relationship with you anymore. None. Listen to this.
You're fine. You don't pay attention to the value of your house every day. Don't pay attention to your portfolio every day. Have a good, sound plan so you can go on and enjoy life.
See, they want you to believe they're taking care of you, but remember how they're getting paid. They're getting paid not by performance. They're getting paid when you give them a check. That's right. When you give them a check, they come in and they take their money right out of your check the first day. They don't get paid on performance until if they went along and they deregulated Wall Street. That's fine, but they should have also said from now on, the brokerage, the money manager, the guy that takes care of you, the only way he gets paid is on performance. When he makes money for you, he makes money. When you lose money, he loses money. That's the way it should be. But they didn't do that. They decided, okay, let's go buy the stocks first because we can't make money anymore. We're not getting $150 a share anymore. We're getting $5, and we'll just mark it up. So they would start selling you stories, just plain stories. The days that they went and got those undervalued stocks and worked them for you for 5-6 years, you made money, those days were gone forever. So to make money, the only way you can make money is by following the money. That's right. Who? The big institutions, the big guys. So what we decided to do is come up with a formula or come up with a technique that follows the money. That's right. It's a simple W formation. A simple W. Looks just like this right here. Look at this. Simple W formation. Isn't that amazing? So we decided to come up with a technique that would identify for you when the institutions that own Ford, if they were going to buy more Ford, you would know. If Vanguard and BlackRock and T. Rowe Price owned a lot of Ford, we would follow them. And if the W looked like this, that meant they were accumulating. They were accumulating stock. See, that's all you need to know. Just little W formation. And after all, what is a W? A W is nothing more than a consolidation of candlesticks. It's consolidation of candlesticks. And that is the W. That's all it is, consolidation of candlesticks. And then they break out. And once they break out, you make money. That's called pricing power. So a W formation identifies for you when the institutions like Vanguard or Bank of New York or JP Morgan or Dodge and Cox, when they're going to buy more stock of the company they already own, a W will form. And when that W breaks out, you buy. It's that simple. Because again, a W on a chart is nothing more than a consolidation. How simple is that? There it is, right there. And you never buy a stock until you make sure you got momentum. You never buy a stock until this red line is above this white dotted line. We start out with 25 shares. That's it. Until it reaches 32%. Once it reaches 32%, then we teach our gang members at 32% right here. They can buy as many shares as they want. They can go from 25 to 25,000 shares. It doesn't matter, but only until it gets above 32%. So we have a way for you to make money where you control. You're in control. And it's by simply using technology that we built into these charts, these W formations, these little aids that help you like this. So simple, so easy. And here's the better thing. You can make money when the stock market goes down. But you know what? You don't even have to know about W's. You don't have to know any of that stuff. That's right. How about this? We designed a chart, again, to follow the money. So simple. My chart tells you, a voice comes on and tells you when to buy, when it goes from red to green. Here, look at this. This stock went up 12%, over 12%, from red to green, 12%. But then here's the neat. It turned red, and we shorted the stock all the way down, and it's still red today. That's a 27% drop. So you would have made about 12% when it turned from green to red, and then you could have made another 27% until it turns green again. So whether you're using my PT1 chart or my PT2 chart, it's all about technology. Don't worry anymore about the fundamentals of a company. It's all jibber jabber. It's all jibber jabber. If you remember back in July, the last week of July, right here, when this market turned red, I told everybody the bubble has burst to start shorting. And we shorted this market all the way down, and we're still short today. From the simple green, it was the last week of July. It identified for us money was coming out of the market. Look how accurate it was. And we're not going to buy again until it's green. And you can do that with individual stocks. So whether you're a person who's so busy, you don't have time to come to my class, you don't have time to learn, it's just a simple chart of buy and sell. Or if you want more action, and you come to my classroom and you want to use the PT1, either case, PT1, PT2, short-term, long-term, we have it for you. It's all about charting. That's it. It's that simple. So join my gang, check out these charts, and we will make a big difference in your life. We really will. No longer do you depend on Wall Street or Yellen or any of these people, okay? They're not on your side. You heard what he said. I'll play it again for you.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
So you want to trust them or trust yourself? I'm not even asking you to trust me. I'm asking you to trust the charts. And a lot of people do, and they're doing just fine. So we'll see you on the charts. Join my gang, philsgang.com.